like I said, we've seen weird action lately, even on days where the markets generally float up. So let's keep an eye on what happens today. Do markets end green? They are up substantially right now. I think we'll get a small bounce like this, a lower high again, and then I think we get our next big breakdown, which would be that head and shoulders neckline break, and we start to move towards that $5,600 target right down here. That next leg up would be this upsloping trend line, which is around 115,000. It is upsloping, so in a week, 2 weeks, it might be 117, 118,000.
Are the markets ready for a massive shift? Gareth Soloway uncovers shocking patterns in the S&P 500, Tesla, and Bitcoin that could determine the future of your investments. From critical resistance levels to major breakdown scenarios, his analysis is a game changer. Stick around as he predicts the biggest moves for 2025, and you won't believe what he foresees next.
First and foremost, new year, we are seeing the futures up a little bit here this morning. And again, getting that little initial like, okay, new year, new buying opportunity, money flow coming into 401ks to start the year. That generally is normal. But we have to remember, we were looking at markets that were up on Tuesday before the holiday. They were up pre-market and they ended lower. We saw that institutional selling come out robustly and push the markets to the downside. So as much as the markets are up pre-market right now, this is the S&P or SPY pre-market. And you can see again, this is where we closed on Tuesday right there. This was the after hours on Tuesday. This is the morning this morning at 4 in the morning right here. A little bit of a pop and then sideways consolidation. Now, for those of you chartists out there, what type of pattern was that pre-market? Classic bull flag, right? Sideways consolidation, and then it leads to that pop. Now, what's interesting here is pre-market, we did see this pop, and then it kind of has a rounded top and starting to make a bearish pattern here. So again, like I said, in general, the first of the new month, the first of the new year, you have people that can now put more money into their retirement funds. So it generally is on a basis of normality, on history, on data points, you get an update on that first day of the new trading year. But like I said, we've seen weird action lately, even on days where the markets generally float up. So let's keep an eye on what happens today. Do markets end green? They are up substantially right now. All right, here's your daily chart of the S&P 500. What I want to bring your attention to is what's called a head and shoulders pattern. It is a bearish pattern on the charts, and again, it's bearish once the neckline breaks, right? So let's look at the neckline. Where's the neckline? The neckline essentially takes the armpit here and connects it right here, and that becomes your neckline right through there. The head and shoulders, for those of you that maybe can't see it very clearly, here's your left shoulder, your head, and your right shoulder. Now, what you're watching for is if this breaks right here. If you trade below that area, which is right around 58.30, 58.25, you actually can calculate your measured move target. How do you calculate your measured move? You take your highest point of the head, drop a plumb line straight down to the neckline. You take that distance and you replicate that distance down. It'll probably be down in the 5,600 range as a target. But remember, as of now, this is a preliminary pattern. It has not triggered because price has not broken this neckline here. So again, I'm giving you kind of the game plan for what could happen if we violate that level. As of now, we have not, and right now the markets are set to open up a little bit right around here. And again, that's okay. By the way, let's talk about how a head and shoulders pattern is negated, right? That's just as important to know when it fails versus just when it's successful. Here's your head and shoulders pattern. The way you know if a head and shoulders pattern fails, if ever price were to rally up and take out the high of a head, it would then be negated. That pattern would no longer exist. Think about it from a human perspective, right? If I stand right in front of here, shoulder, shoulder, head, you're not gonna, as much as I try, I can't get my shoulder to be above my head. Therefore, again, that wouldn't be a head and shoulder pattern anymore. Very simple to think about it like that. That would be something that you would pay attention to. Another thing to note here, technically speaking, once that head and shoulders pattern breaks, right? So let's say it trades down here. Here's your neckline, so you're back below. If at some point you trade back and and actually confirm back above the neckline, it is also negated, right? So again, you have to be aware of this stuff. So many people are so focused on, oh, that's a bearish chart, and then they just think, okay, well, no matter what happens, it means it's going down. Not always. We always have to be flexible as technicians to understand that every single day we get a new candle, the probabilities could be shifting one way or the other. Once we get back above and confirm, probabilities actually flip to either a 50-50 at that point or even favoring further upside with a failed pattern to the downside. Let's zoom out on the S&P 500. Let's draw our trend lines here real quick. A cool trend line to take note of is this one right here. This one connects this high to this high to this high and that last high. So that's an interesting one to note. And then we also have secondary trend lines as well. The big one that I'm kind of following here is this one. So this is a one that we've followed here recently. And remember, this is one where it connects the August low through this secondary pivot low. And then we broke below it and we retraced and got rejected into year end off of that level. So notice how these two trend lines are coexisting and starting to get closer and closer. They're going to join forces, and the nice thing about that is it's going to give us a very defined level of whether the bearishness continues or gets negated. So for instance, if for some reason we trade above these two levels, well, guess what? Now you've blown through both resistance areas and the market is free to go up a significant amount more. I don't think that will happen, but as a good chartist, we always have to be ready for something that might be unexpected. I think we'll get a small bounce like this, a lower high again, and then I think we get our next big breakdown, which would be that head and shoulders neckline break, and we start to move towards that $5,600 target right down here.
Gareth Soloway analyzes the early New Year market trends, focusing on the initial optimism in futures trading and the institutional selling that followed. He explains how historical patterns, like money flowing into 401ks, typically boost markets, but warns of unusual volatility this year. He dives into the S&P 500, highlighting a developing head and shoulders pattern, a signal that could lead to a major downturn if it breaks key support levels. Gareth expertly outlines how these trend lines will dictate the market's next move, emphasizing the importance of watching for a potential breakdown or bounce. This detailed analysis sets the stage for what's coming next. Stay tuned to discover how these patterns could shape the markets for the rest of the year.
Tesla is on watch. It continues to break down outside of its upsloping channel. Today, pre-market, we are seeing Tesla. Ooh, whoa, just got a nasty pop. All right, so guys, wow, that's a big drop. If I was at my trading desk, I'd probably be buying up a little bit right here. Big drop on Tesla. All right, so this is what's going on, and I was watching for this number. The number was deliveries. So they were going to announce their deliveries this morning. Needless to say, they've already announced them, and that's why you're getting this big drop. So obviously, deliveries probably were not up to par. But wow, let's talk about levels. I was just going to go into how we might get a small bounce, but then a bigger drop. Your target price is $360. Pivot high, right through here. That's your next target price. There should be a big bounce at that level. Going back to the pre-market, we got down to 383 here and are now bouncing back up. Again, that would be your big swing trade level. As a day trader, there will be levels. For instance, if I'm just going down here, I actually see a level at 370. There might be a little pivot at actually 389, which we already pierced, but there are some little day tradable levels here, which of course we'll be doing in the live day trading, Apex live day trading room today. But the swing trade, and listen, swing trade is a relative term. I want to be clear. This might just be a 1 or 2 day bounce level, but I would expect right around 360, 358 right here to get some sort of bounce. Maybe we even hit that today for all I know. Unity Software is a big mover this morning. That surprised me because I didn't know that number would be out right now in real time with Tesla. But the key is Unity Software. Guess who talked about it a little bit? Roaring Kitty, Keith Gill. And so sure enough, he still has his power. He has his, it's funny, you almost have like a printing press. He almost has a printing press. He can talk about something, he can buy something and then talk about it, and then all of a sudden it's up 20, 30, 40%. Amazing to have that power in the world of finance, especially when it comes to positions that you like and be able to mention. But if we go back to the charts right here, you can see what Unity Software has done. Big pop from basically closing around 2250 on Tuesday, rallying all the way up to 26.5. It has pulled back, but that is on watch here. Double top here for today on Unity would be a resistance at 2865. That has not been hit yet pre-market, and that would be a short-term double top. There's also a small gap fill at around 2890. So right between those 2865 to 2890, there should be significant resistance on Unity Software today. So Bitcoin, again, folks, is holding up. It is getting a bounce today. Notice how the bounce is coinciding with the NASDAQ, the S&P, trading up nicely here in the morning session. And again, one of the things to keep in mind is, does it matter if Bitcoin trades here? Does it matter if it trades here? Does it matter if it trades here? The answer is it doesn't matter on a technical basis. Why? Well, suffice it to say is that right now, on this basis, the only thing for a technician, a true technician, not someone who's ruled by emotion, but a true technician, is this line and this line. It's the only thing we care about. So Bitcoin could go like this for all we know. Doesn't matter. Does it break here? Okay, if it does, it gets its next leg up. That next leg up would be this upsloping trend line, which is around 115,000. It is upsloping, so in a week, 2 weeks, it might be 117, 118,000. We don't know yet. We have to see if price does do that. We have to start looking and seeing, okay, where does that potentially take us to? If it breaks here, you start your drop down to about 75, 73,000. All right, so again, my point is that a lot of investors, you'll see Bitcoin up today on social media. They'll be talking, oh, here it goes. Here's its next big move. If it goes down, you'll see the bears come out. Oh, here it goes. It's going to break down. Be agnostic in that way, meaning that don't let the hype, either side of the move, don't let it influence you.
Gareth Soloway's insights are a must-watch for anyone navigating these turbulent markets. Whether you're a stock trader or a Bitcoin believer, his expertise reveals opportunities you can't afford to miss. What do you think of his predictions? Drop your thoughts in the comments below, and don't forget to like and subscribe for more market-changing insights. Stay sharp, and see you in the next one.